want to welcome all our sort of how do we describe them? Our guests, viewers, yes, to our first ExchangeWire webinar. And today we've got Jay MacDonald, CEO and Managing Partner at Digital Capital Advisors, and Jay has kindly granted his time here to discuss some of the big high-level issues affecting ad tech and the industry in general. So, Jay, thank you for doing this today.
My pleasure, Kieran.
This is our first ever webinar, so if it goes tits up, then forgive us, please. As you can see, I'm having a cup of tea from the ExchangeWire bunker. I'm hunkered down with my spam and my toilet roll, and I'm digging in for a month's lockdown. So here's to my fellow Londoners.
Right, I've got my Dunkin' Donuts where I'm locked down here down in Florida. So we've got a distributed workforce. We've got people at our firm out in Long Island. We've got people in New Jersey. We've got them all over the United States right now. Everybody's in lockdown.
Very good. So Jay, let's kick off because this is an extraordinary year, unprecedented in many ways. I mean, we are going through probably an event that we've never seen. We haven't seen in over a century, which is affecting quite a lot of stuff. But we've had a couple of black swan events this year for ad tech. Obviously the Chrome announcement at the beginning of the year, it kind of pales into the significance compared to a global pandemic. But it's a global pandemic for ad tech. So I want to talk about some of these things first, right? I want us to talk about these two specific black swan events, right? And what you think, what businesses in MadTech are going to succeed going forward, because the recession is inevitable, and obviously ad tech was kind of reeling a little bit from the Chrome and ITP and all the rest of it, and the end of the cookie. And I'm just curious to know what your sort of view on what sort of types of businesses in MadTech are going to thrive and succeed going forward.
Yeah, so I think probably the best way to start, Kieran, is to kind of talk about what our view is of the M&A markets in general. As you know, I published a piece the other day, and and the opening line was really just everybody stop, take a deep breath, right? I think one of the things that we all live in this world today is a world with a tremendous number of media outlets, right? And so those media outlets need to obviously fill the air with news. And of course, there's only one news these days, and that news is about the pandemic. And so there's a tremendous amount of fear that is not only in the United States, but frankly, it's across the globe. It's in Europe. It's in Asia. It truly is a global phenomenon. But the reality is, like everything else, in life that you get with a challenge, you have to take a deep breath and assess the situation day by day. Yeah. Because the reality of it is, business will continue to get done. It's going to be severely impacted, no question about it. There's some areas of the economy, there's some areas of ad tech, there's some area of MarTech, there's some areas of just the digital economy are going to be negatively impacted. But on the flip side, there are also going to be some of those areas that are actually going to be profitable. They're going to experience, maybe even some short-term growth. I mean, obviously, what comes to mind right off the bat are things like, that consumers are consuming in their home now because everybody's working remote, right? So, right off the bat, the service that we're using right here, right, we're using Zoom. A lot of these online video services are going to experience a positive uplift because the world is actually communicating now. Instead of meeting face to face in your office or otherwise, you're communicating via online video. Consumers are obviously consuming tremendous more content across the board now than they were before, right? Because they're consuming it at home. And what does that mean? That's business information, that's television, that's online gaming. It's just content, and I think there's certain content players that are going to, particularly the gamers, are going to see a strong uplift, if you will, during these very difficult times.
Do you think there's a shift in behavior coming in terms of so if you think about traditional media? I was talking to someone today particularly what brands are doing. I wonder if we're going to see a shift towards performance rather than brand. So above the line branding kind of goes away. We move more to a performance based marketplace. Obviously the commitments for TV, we see it already. In the States, you've got all the sporting events are off. When the Euros are off here in London, or off in here in Europe. I'm sure lots of sporting events are going to be cancelled. Are we going to see some shifting of money around? And what does that mean for some of the sort of automated platforms, the programmatic platforms going forward? Will they see the benefit of this as we move more towards a performance-based market and sort of like ROI-driven buys? Or do you see, what do you see happening there?
Yeah. I mean, I think, I think on the platforms, the buying platforms, I think you're going to see prices drop dramatically over the next months, and mainly because there's fewer people in the auctions, right? Less competition.
Right.
So the competition in the auctions are going to drive prices down, and there's no question in my mind anyway that performance-based advertising is going to see an uptick. It always has. Forget the pandemic. Any kind of during recessionary time, you're going to see things that advertisers shift dollars from kind of global branding to more specific lead generation type performance based marketing. Because obviously one of the things that they're going to need to do is they're going to need to increase their own sales versus building their own brands. And if you look at advertising historically, even pre the internet, that was always the case. Anytime you'd have an economic downturn, you'd have the global branding dollars and television, things like that, pulled back to more performance-based. Now there's more outlets for performance-based marketing, right? I think you're going to actually see a stronger push for the connected TVs, right? I think the interactivity of the connected TVs, I think you're going to find a number of investments that are going to try and make that venue and medium much more valuable from a performance-based side. Obviously, that while people talk about being able to interact with the television, the fact is it's not even close to being anything a utility worth using right now.
Well, so you think there could be a shift towards like CTV could find its stride here during this crisis, then potentially, because we move from like linear. We move money from linear to CTV, which has got a sort of automated one-to-one element to it and an ROI-driven element to it.
Yeah, well, I think frankly, I think the big guys are going to see even big guys are going to see a little negative impact, and Google, Microsoft, and Verizon. And why? Well, they're going to be 70% of if you look at the travel category in general, which is going to be decimated, right?
Yeah, they're terrible.
Travel represents about 9% of digital spend in the United States. Retail represents about 22% of digital spend in the United States. Both of these guys are heavy users of search. And so those search dollars obviously are going to be negatively impacted. And of course, that's going to negatively impact, Google, Microsoft, and Verizon. Now, they may pick up some dollars from some other categories, but I think, certainly I think you're going to see a bounce with YouTube, right? Because, again, consumers consuming content indoors now. About to go, there we go. I had to refresh my screen there.
There you go.
I
love the live element of this.
Exactly. So, you got, I think you're going to see some entertainment and sporting goods. Those guys are going to take a hit. But the good news is digital spend was actually was originally forecasted to increase this year about 15%. And, our estimate at Digital Capital Advisors is probably going to be a 20% negative hit from the spend side in the short term. So, if this pandemic doesn't last, longer than, like I said,
oh, we've got some trouble. The Chinese have hacked us. I won't joke, by the way. Jay's gone a bit. You still there, Jay?
I'm here. Are you there?
Yeah. Your paper's over the camera, Jay.
There you go.
I
Good.
think we got the stream hacked there. This is the live element of webinars across the Atlantic. It's not all fucking sailing this stuff. Like, in fairness,
Yeah, I love it.
you were saying on the uptick, it's not that's pretty much going to be wiped out this year. Obviously, they were expecting an uptick in digital spend. And
Yeah, 15% or so, right? Yep. And I think, but you're going to see things like there's going to be new investments in like ed tech, right? Some of the winners are going to be obviously healthcare, pharma,
yeah,
alcohol. You're going to see spending coming from politics. It happens to be a year, obviously federal election in the United States, and again, while those dollars are actually taken off the market right now, while everybody's focused on the pandemic, come back real strong.
yeah.
It's a question mark whether the Olympics come off. But if the Olympics do come off, and they do hold the Olympics, you're going to have a uptick in spend there from the Olympics.
Yeah.
And look, China's already
coming out of it.
But China's already seeing a 4% increase in digital spend.
Yeah.
So you're going to see, and again, that's why I go back to the title of my article, first sentence of my article. Everybody needs to take a deep breath. You need to assess the negative and the positive. There you go.
Yeah.
And that's why I said the alcohol category was going to.
Alcohol does well. I've been drinking my way through this whole thing, like, a bottle of whiskey under my desk. No, I don't. I'm joking.
Contextual, you want to say just one other point is because we talked about performance-based. I mean, I think, and this has a lot more to do with the cookie-based issue coming up, but obviously contextual is going to become hot again as a category, right? Contextual advertising.
Yeah.
And particularly in the short term until companies begin to figure out a way to live in this new cookieless world that's coming in about 18, 19 months.
Right.
Which I'm of strong opinion they will.
Can we shift gears a minute, Jay? Just particularly around the programmatic ecosystem. I think it's quite interesting. With the cookie stuff, I know obviously the Corona stuff is definitely a massive overhang economically. But let's just say even if Corona didn't happen, the overhang from the cookie apocalypse, if you will, it was going to have a dramatic effect on the programmatic ecosystem. So I'm wondering what you see happening in the sort of like tech stack, if you will. So are we likely to see consolidation? So today it was interesting. There was a story about the Trade Desk integrating directly to TikTok, which I found interesting because there's no SSP in between. It's just straight integration into TikTok itself. So I'm wondering if there's going to be some kind of consolidation around that center ground, if you will, between the likes of SSPs and DSPs. Now, the Trade Desk entered pre-bid last year, which means that they can probably jump over the SSPs themselves and go straight into the actual header. And I'm wondering if you think that the SSP there will slowly become an irrelevance, if you will, going forward because of the likes of the Trade Desk's actions, or do they still have a future going forward in terms of helping publishers figure out ID and the ability to sort of like make more money, make more yield?
Yeah, I think the SSPs the strong ones will survive, but I think in the short term, what's going to happen this year in 2020 is because of really this pandemic and the effects that it's had on the digital economy, really the entire economy, but we're talking about the digital economy today and ad tech. I think that you're going to see small and mid-sized point solutions, who don't have the capital to invest to upgrade, if you will, are going to have a very difficult time, and I think you will see a lot of consolidation. I mean, it's like you saw Video Amp yesterday, closed on Conversion Logic, and really,
yeah.
Conversion Logic was really they were headed to bankruptcy a couple months ago, and so obviously that was a fire sale. But there's a large number. It's like Seismic, right? I mean, Seismic. Zeta picked up their ad serving, the DSP side, and then you've got Tier 39 was spun out of there. I think you've got a lot of these smaller point solutions that are going to get integrated into the stacks across the board. But I do think that they're also going to be short-term solutions because most of them are cookie-based, right, or have some attachment to the cookie. And so there's, again, it's, I think Merkel just recently talked about, something about their new platform called Mercury. It's an identity resolution product, if you will, but it's still attached to cookies, right? And so I think what you're seeing in the stack is those that have money, right? Those that are larger, profitable platforms are able to kind of go in the midterm, create new products that are going to be good enough, better than what they have, good enough until they can figure out how to go cookieless in 18 months. And those companies that don't have the money are going to have to find a home.
Excellent. So just based on that, do you think that independent ad tech, right, as it is, has as a vibrant future? Because there's still some huge problems out there, right? Let's just think about one or two, right? So targeting obviously is an issue now because of third-party cookie deprecation across all the platforms, and measurement, because how do you measure the campaigns as you run and display, particularly because there's no third-party cookie to measure or build attribution around. So in that vein, do you think the independent ad tech layer does have a future in many respects? Because obviously you invest in companies, you sell companies, but I'm just kind of curious to get your view on that independent layer, right, which is obviously under threat right now.
Yeah, look, I mean, I think the opportunities in ad tech are around, joining lots of information together in a privacy centric way to get better insights, right? I mean, that's really, there's going to be areas. I don't think ad tech's dead, right? I mean, and there's always times when sectors are, an entire sector is in favor, and most of the time there's segments of each sector that are in favor and some are out of favor. I think, ultimately right now, privacy-centric analytics, consumer identity, context, those are areas that are going to be, and then, like we said, performance-based marketing and things like that. Those are all areas that are going to remain strong and probably, rise above, if you will. Now if you're, again, a smaller point solution and you're, still suffering from issues as it relates to privacy. And there's a lot of people that are out there like that, even though that their marketing says something different. I think they're in trouble. Now I want to shift, if you don't mind, for a second. I think an area that really hasn't an opportunity, if you will, for ad tech that hasn't really come to fruition yet, and that's the usage of AI, true AI. Google, Facebook, Microsoft, they've bought over, I think it's something like over 90 AI startups in the last year, right? And and what they're really buying is not only the technology, but they're buying the people. They're buying the talent. And I think, one of the negative sides of ad tech is there's a big herd mentality. When somebody comes out with something new, everybody changes their own marketing and says, we have that too, right? So machine learning, artificial intelligence. Well, I do think, now everybody in ad tech has that on their websites that we use AI. But the reality of it is most don't use AI, to its full capabilities. And I think ultimately, AI is going to play a significant benefit to ed tech companies if it's true AI and it's used properly.
Well, it's interesting you say that.
Certainly the platforms themselves.
Yeah.
Because they're already automated, but once you're able to really use artificial intelligence to generate a faster, more accurate, more targeted, more efficient auction, it's only going to help the ecosystem.
And also, if you think about where we're heading on Sandbox, particularly from Chrome, a lot of that would probably be just like basic sort of panel-based data. Like, so, the ability to do probabilistic modeling then will be based on how good your machine learning is or how good your AI is. Because, a lot of the, if you think about where an SSP and DSP will go, they're just currently they're all about matching IDs, right? And that'll go
Right.
away. So then a DSP then has to become this tool where you can build those types of modeling, and it'll become really important. So you're right. I think the machine learning AI piece is going to be very, very interesting. So just
Yeah.
we had a question here from Alan from Bidstack, sent it in before the actual event. This glorious event happened. This media earthquake, if you will. He's asked here, what type of tech or media specific tech is highly sought after at the minute? Why? So, as a man who sells businesses, what sort of type of tech or media specific tech is sought after by your buyers?
So I think that's the $64 million question, isn't it?
Yeah.
Yeah, so to speak.
You sell out gaming companies, though, don't you?
Yeah, I mean, besides gaming companies,
Yeah.
well, just a side note on the gaming companies. Now, we're working with one right now, a global gaming company, and I can tell you this should give some folks hope in this very difficult time. It is a extremely active process, even in the midst of all of this, with a large number of buyers that are super engaged, enthusiastic about it, even in the middle of all this. So there, if you have the right product and you have the right service, and you're and that you're what I would call headed into the correct winds, if you will. I think you're in. I think it's okay time. There's going to be a lot of businesses that are going to be going to have a difficult time selling in this environment. If you're in the sports and entertainment business, I think it's you've got a challenge.
Yeah.
Yeah, you've got it's a shit show, but there are. So as it relates to what type of tech is really sought after right now, the answer is, and this may not be very comforting, is I don't think there is a lot of tech that's being sought after right now. Again, I think just during this environment right now, like I do think that because buyers recognize it's like Zeta and all these other companies that are great bottom feeders. I mean, you saw Remco Westerdahl who bought Verve, right? Everyone knows that these companies are may have good tech, but their businesses themselves are challenged, and so they can them out. They can wait them out. I'm going to give my my entrepreneurs who are listening here the J. MacDonald speech, and I was an operator for 20 years before I got into the dark side, if you will, and my advice is very simple: get profitable, because when you're profitable, you have an extra option, and that option is to do nothing.
Yeah.
Right. If you're not profitable, and you're short on cash, or there's some event like our pandemic that impacts your business, you're in a very difficult situation. So I think right now, as it relates to ad tech, I mean, technology specifically, I think most areas, unless you're talking about tech that enables, connected TV, or if you're somewhere in the OTT world, I think because those areas are still, growing, and they're also right now, going back to what I said earlier, home entertainment, if you will, confined entertainment, content, if you will, is strong, and it's going to remain strong. And so anything that helps enable that from the technology side will be of interest. But trying to get that in and sell that in this environment is probably going to not be as easy as, let's say, you have some content itself that's attractive to the buyers.
So let's just say we get out of this mess, which it is in the minute, because it's we're just stuck, right? And we have to navigate our way through it. And it looks like for people looking for glimmers of hope, the Chinese have managed to get the grips on the actual spread of the virus. Hopefully, we'll follow suit in a couple of months. It could be a June or July event. But let's just say we get out of that, Jay, right? I'm just curious to know who's going to be buying companies, right? Will it be the big private equity guys who've got lots of money and there's lots of value in the market, or publishers, or even maybe brands? Like, so from your perspective, let's put Corona aside and say we get out of it and we snap back to some kind of normality, which is what we want to do. Who do you think is buying companies? Private equity just buying loads and rolling them off? What do you think?
Yeah, no, so I mean, I think what's interesting is I'm going to add another piece to a little twist to your question, which is the real question is who is going to buy, but who's going to pay premiums, right? Because when you're selling
Nobody.
when you're selling a company, you're looking for your value, right? There's good. So to answer your question is, I think a lot of people are going to be buying companies. I mean, I think everybody's going to be buying companies, but not everybody's going to be paying premiums. So you're going to have those people like Zeta and a number of others that are bottom feeders, which are smart. They are able to buy good, solid technology that comes with great people that are not good business models and integrate them into their stack and get at maximum value for them, not necessarily for the person who's selling the company. On
Yeah.
the flip side, there's going to be, you want to look for, I think you're going to see, in the short term, you're going to see the publicly held companies probably back off on acquiring things. I think I said in my article, one of the main reasons is their stock has been decimated, right? Most of their stock public sector, and that means the C-suite right now is not very happy. And when this thing does pass, their first order of business is to make sure that they acquire their customers, make sure their customers are strong, make sure their employee base is strong, and then get their stock price up. And so that means they're probably going to be holding off. Not 100% of them, but most of them will probably be holding off. But there's a large number of privately held companies that will be looking to acquire because there's going to be good value out there. And so it's really, I think you're going to see, yes, you're going to see private equity involved, but you're going to see private equity all across the board. You're going to see private equity looking for bargains to tuck into their current portfolio companies. You're going to see one or two large private equity groups try and identify a real platform company and roll up a whole new sector. I think you're going to see a lot of investment go into the data privacy area, like we talked about before. So, I mean, I think there's no hard and fast rule about who is going to be the acquirer. Is going to be a large number of acquirers out there. It's a question of identifying who really is going to pay a premium for your product, and therefore understanding the value proposition that you bring. Because these companies are going to have problems, and here's what the people on listening to this podcast should think about. You've got to solve one of their problems. If you solve one of their problems or a multitude of their problems, because coming out of this pandemic, they're going to have a lot of problems. If you can identify what problems you solve, they're going to pay a premium for your company.
Okay. That's great, Jay. So I think we'll wrap up there. I want to thank you for giving your time up today for our first webinar, and I would like to say to all our viewers, thank you for tuning in. Next time we will do some live questions. I can see some questions flashing up here on the screen, but this is my first time, so I'm all over the I haven't a fucking clue what's going on here. Let's be honest with you. So I apologize to anybody who's been sending questions furiously at the bottom of the screen. There's a big orange flashing light, and I'm not really sure what that is. Where I come from, orange is the bad thing, because that's usually a bunch of orange other guys trying to kill me. So it's fine.
That's funny.
Yeah, that's funny. So Jay, look, thanks again for doing this. I really appreciate it, and your insights always really welcome here. And hopefully we'll see you this side of the pond in the near future. And take care of yourself there in Florida.
Thank you, Kieran. And everybody stay safe and everybody calm down. This too shall pass.
Thank you, Jay. And from the Exchange Wire bunker where I'm currently hunkered down for the next month, I want to say goodbye to everybody.
Cheers now. Cheers.
Take care. Bye-bye. How do we get out of this? Bye-bye.